How you doing, everybody? It's Hollis Full of Love, CEO and founder of Crane Financial. I'm here today with a good friend of mine, Mr. Richard Wimberly. He's a retail investor. We want to talk about opening an investment account and different platforms available to you, some of the pros and cons of working with different platforms. So, Rich, how you doing today?
I'm doing good, man. How you doing?
I'm good. Just trying to stay quarantined as much as possible. Got Kobe in the background, feeling great, man. You know what I mean?
Yeah,
Hoping
that
they're
the
coming back.
Kobe with the hoodie is a good aesthetic, man.
I'm hoping the NBA is coming back, man. That's my hope. But let's jump right into it. So when we talking about you want to invest in the stock market and you're looking to, use a trading platform and open an account, what would be your preference in trading platforms? And you could talk about maybe the ones that you prefer to use as opposed to some of the others out there.
Yeah, I personally use Fidelity, but I think like for people like within our demographic, like the popular platforms are Robinhood, Acorns,
Right.
eTrade, TD Ameritrade as well. So I think there's like different tiers. So I'll try to like break it out that way and then like to provide context on what features and what are the pros and cons of each type of brokerage account.
Right.
So I would say like for a novice investor or a beginner, like you probably will be attracted to like a Robinhood or an Acorns account. One, because it's really intuitive. Two, they're the disruptors in the market, so they are branded towards new investors. There's no transaction fees. It's app based, so you don't have to invest a lot of time in like going into a website and having to have a computer. A lot less barriers for entry. You can open the account with no money inside of the account. It also can do fractional shares. So like if you wanted to buy Amazon, you like, well, damn, Amazon's $2,300. I don't got $2,300. You can buy $300 of Amazon. It gives you a fractional amount of the stock, which still makes you an owner within the company, but you don't have to spend the $2,300 to own one specific share.
Exactly.
Then the other one is probably Acorns, which is been popularized as like a savings account, right? Where it takes your electronic transactions and it rounds them up to the nearest dollar, takes that delta and puts that into an index of fund for you. I think it's a good platform to teach you how to save. But in terms of the viability of actually trading, it has some opportunities. One being you only can choose different types of index funds. So think of it like a retirement account, right? Like you can choose an aggressive account, a moderate account, or a conservative account. And then it has transaction fees and brokerage fees. So think of it like back in the day, you would call a company like a Fidelity and they would have a brokerage account client on the phone and they execute the trade for you, or they open up a mutual fund for you. You pay management fees on that.
Exactly.
Acorns runs off of that model. So I think that they charge 1.5%. So if you think about it, if the market grew 12% in a year, in order for you to make money off of using their software, you need to make 1.5% more than that in order to show that it was more beneficial than you doing it on your own.
Exactly. So for me, it kind of seems like they're almost taking a piece of the pie in order to do some of the groundwork for you. But if you're talking about being a really serious investor and being a more stable investor and you actually want to see your work put in, then maybe a Fidelity or eTrade or something like that is a better option for you.
Yeah. I would say for Acorn, it's specifically geared towards just indexes. So you have no ability to customize the equities that you want to invest in. So if you like, I want an aggressive account, but when I say aggressive, I'm talking like Facebook, Google. I'm not talking Zoom or Tesla. There's different levels of what aggressive means, but it doesn't provide that distinction within the index and Acorns. And then with Robinhood, while you can buy individual equities, you can even trade options. But as you become more serious, you start to see the limitations within the Robinhood app, such as it takes 4 to 5 business days for your funds to settle, meaning that you can't trade until that money is transferred and have been sitting in the account for multiple days. Then it also has transaction fees. It charges you $75 every time you transfer money over, which if you're a beginning investor, you probably don't have a lump sum of money to put in all at once to make that make sense for you. You're probably like, I want to transfer money every couple of weeks or maybe once a month, you're paying $75 every time you do that. So then that starts to add up over time as you become like more serious as an investor. So it's like only natural to transition over into a more sustainable brokerage company, which is like a Fidelity or a TD Ameritrade.
Right.
Which I'll give Robinhood credit though, because they became a disruptor in the space. They've made Fidelity and TD Ameritrade adopt some of their policies, right? So now Fidelity and TD Ameritrade don't have transaction fees as well. So if you open up a trade, like it used to cost $4.95 commission for every trade that you executed. Now that's free.
Right.
You can now also do fractional shares on Fidelity and TD Ameritrade, which a lot of people don't know. And they don't do a great job of marketing that because they don't want you to do it. But they also have the ability for you to do that. And the big advantage to me for Fidelity and TD Ameritrade is it opens up a brokerage account with cash management ability in it. So you get a debit card where you can go to an ATM and you can take out cash if you need to quickly get liquidity. And then it also gives you a little bit more from a research perspective. So you don't have to go and leverage a bunch of different other applications or other web pages to gather your intel. You can do it all in one place with Fidelity or TD Ameritrade, which is really the big competitive advantage that I feel that they have over some of the more novice type brokerage accounts.
Okay, so let's jump right into it. Let's look. I'm gonna share my screen, and we're gonna look at exactly how to set up an account. It's real simple. Maybe just make the distinction on what kind of account we want, and then go into some of that research and looking at the platform itself.
Yep. And we're going to do it with Fidelity, right?
Yep, we're gonna do it with Fidelity. So I'm on the Fidelity page. I already have an account, but let's say this is my first time here. I didn't have one. Okay, so simply I'm clicking open an account.
Yep.
And like you said, so they have IRA accounts, which are not the accounts we want to focus on here. We're talking about investing and savings. And you mentioned the brokerage account and the cash management account. So would we open up both, or would we just choose one? What would you suggest here?
Yeah, I would suggest just opening up both. They're both free, and you also don't have to have any initial deposit to open them. So there's really no barrier for entry for opening both. And then you get kind of the good features of having both types of accounts.
Okay, so we're going to skip the step of breaking down actually opening an account. That's pretty self-explanatory. What you're going to need is your personal information. So your name, your address, your social. Because I have an active account, all that information will pop up here if I clicked open both accounts, and I'd rather not just divulge my information to the internet. So this is an account I have. I don't really use it actively. I think I have like $52 in here. So starting here, this is your first view, welcome to Fidelity. From here, and I want to go into, let's say, funding my account. How would I fund my account? What would be my move?
Yep. So you go to accounts and trades, and then on that left tab, you see where it says transfer.
Yes.
So then you click that one there, and then you set up, how do you want to transfer the money? Are you transferring into a Fidelity account? Are you transferring between Fidelity accounts or out of a Fidelity account? So in this case, you will probably be transferring from your central bank into Fidelity. So you click the one on the left.
Mm-hmm.
All right. And then if you want to deposit money, you just click that first link there.
Okay. You can move from your actual bank account to a Fidelity account. Okay.
Yeah.
All right. And you can link it. So is it as simple as maybe transfer money into a Cash App or transfer money into PayPal, or do I have to go about wiring funds? How easy is it?
Yep. So there's a difference between a transfer and a wire transfer. So in a wire transfer, there will be a lot more nuanced information that you would have to provide, like the routing number, the account number, and then you have to give like a specific instruction in the wire to tell them which account to divulge it to in Fidelity. With a regular transfer, it's just as simple as using like Zelle or Cash App. You put in the requisite information, and then however much you want to transfer, and then it does it instantly.
Now, starting off, if I haven't made any transactions before, would there be any limit on the amount of money I could transfer in and out of my account?
Yeah, the limit is pretty ridiculous. I think it's like $1 million. So
okay,
okay, pretty much transfer whatever.
All right, cool. So now let's get into some of the research capabilities of using this platform, right? So we've went ahead and downloaded Fidelity Trader Pro, I believe it's called.
Yeah, if you go back to the main webpage, I can actually show the audience how to actually get to where the app that we downloaded.
Okay, no problem. Sure. All right.
Yep. So again, under accounts and trades.
Active Trader Pro.
Yep. And then there, and then it's going to queue like get Active Trader Pro, and then you do it just like you would download anything else on your computer from there.
Right. So I can actually show everyone my Active Trader Pro, which I have up and available.
Cool. All right. So the view that we see here, this is the options trader account. But Hollis, just for like good workflow, let's start with the investor account because most of the audience will likely be doing regular equity trades. All right, so we got three things here on the window. The thing that you see on the top left banner, that is going to be your account summary. So if Hollis was holding any positions, he would see that here. So let's say he had, shares of Facebook, it would be a line here that would say how many shares he had, what was the last bid price, what percent change is in the price, and then also there's a little bitty section on the left side where it would say current news, where if there was something big that was happening with Facebook, he could click that link and then it will open it up and tell him like, hey, Facebook's earnings report next week, or Mark Zuckerberg is going to Capitol Hill because he's in trouble about XYZ. You can see all of that information here all from this one screen.
Okay.
All right, and then there on the bottom, that's going to be your chart. So you can customize whatever time horizon you want, whether it be a 1-day chart or 1 year, but essentially just tracks how the price of the stock has performed over time. And then there at the very bottom where you see sort of like a little bar chart, that is the trading volume. So the reds mean that's the trading volume of the people that are selling. The green represents the trading volume of the people that are buying. Obviously, when you see more greens and higher levels of green, that means the stock is going to go up. When you see more red and more levels of red, then that means that the stock is going to go down.
All right.
Cool. And then on the very far right side, that is actually where you're going to execute your trade. So this is why I prefer using Active Trader Pro over just using the Fidelity website. One, because it's just really fast and it's a lot more intuitive. So let's say in the individual account that he already has up, that he wanted to buy shares of, let's keep using our example of Facebook. He can go under the symbol and he can just type in FB, which is the ticker for Facebook. So you do have to know what the ticker is or this won't work.
Right.
And then from there, under action, he can put whether he wants to buy the stock or sell the stock. Since he doesn't hold it right now, he will be buying it.
Right.
Then if the market was open, it would tell you, all right, Facebook is selling at $192 a share right now. And let's say Hollis wanted to spend a little less than, a little more than, let's say, $2,000. Then he could say, all right, I want 10 shares under quantity.
Yep.
And then under order type, you have a couple of different options. So go ahead and click that one, Hollis. And then you have your market order, your limit order, and then you have your stop limit. For now, especially when you first start, we can just focus on market and your limit.
Now,
Market
what would be the difference?
Yeah. So market order, it means that you are willing to buy the stock at whatever price the market is at right now. So
okay.
When you see on that screen where it says bid versus ask, you're going to buy it somewhere within that range. So if the bid is, in the ask is 192 versus 192.10, you're going to be somewhere within that trading range on what your purchase price is. And that is going to create your cost basis, which is the price that you bought the stock at times the number of shares you bought. In a limit order, which is a little bit more strategic, it's, all right, I know I want to buy Facebook, but I don't want to just buy it for any price. There's a specific price that I want it at. So let's say the stock is trading at the 192, but you're like, I only want to buy it if it goes to 190. Then you can go to order type, you put in the limit order of 190, and then you see there it's going to say, all right, well, what's your limit? And it's going to, you can do 190, and then when you execute the trade, you don't have to watch it anymore. Now it's going to automatically execute the trade whenever the stock hits the 190. This will last until the market closes for that day, or you can also select good until cancel. which means that it's going to execute this trade whenever you want up until the day that you decide to cancel the trade. And then that's essentially buying the trade. From there, at the very bottom, it'll say preview order, which I think may not be showing on the screen right now, Hollis. So you might have to scroll down a little bit. Yep. So there where you see preview, it's going to give you like a little bit of a recap on like how much money are you spending. And then from there, you would submit the trade, and then that's it. You on mute, Hollis. There you go.
I think that was a really good breakdown in terms of how to navigate really simply through the Fidelity app. Now, of course, it'll take a lot more technical analysis to go through and kind of read through these charts and have an understanding on exactly what's all going on in them. But I think for a beginner's basis, this is actually a really great breakdown, Richard. I appreciate you.
No problem, man.
All right. So everybody, again, we just want to educate people and give them the opportunity to learn some of these things in terms of stock market. And I think this is a really great introductory review. We'll be back to you soon with more information.
Cool, man. Appreciate you.
Appreciate you.